We see a lot of operators just kind of just falling out right now because they grew too fast. They didn't know, what they were buying, or they knew what they were buying, but they didn't know the cap rates and, all this stuff, right? So, our team is really tight, and we're able to, grow at the right speed for our investors too.
Welcome to the Real Freedom Show, where we inspire you to pursue your passion to gain time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. Let's get some real freedom together. Hello, everybody. Welcome to another episode of Real Freedom, talking about building time and financial freedom through opportunities in real estate. Real estate is a great gateway for people to achieve their dreams. And so for a lot of people, I'm doing my work by day and I'm investing in real estate at night, and maybe that turns into something full-time, or it just stays something passive, more passive, that I can do in addition to my job as I'm building additional income in addition to my W-2 income. And so today I'm super excited. We've got a great story. We've got three guys here who all work together on putting together real estate syndications, and they all play different roles. Primarily, they're investing in the St. Louis area with apartment buildings. And so we'll talk to them and hear a little bit about how they all work in tandem. And so we've got Michael and Nick and Mark here, and they're going to share their story. So feel free, guys, to introduce yourself, share a little bit about your background, and then we'll kind of get into your roles and how it works and how you guys are working together to achieve your goals through real estate.
My name is Michael. I grew up with real estate a little bit in the background. My dad was an architect. My brother is currently an architect in Chicago. I grew up in Wisconsin, so not too far from you. I have a lot of friends in Minnesota. I think my mom actually as well owned several properties, and was kind of accidentally house hacking or doing the thing where, she would move and rent it out and then eventually, fix it up and eventually flip it, kind of unintentionally. And I started being interested in real estate over 20 years ago, but it took until like 2018 to actually, pull the trigger. I'll save the full story for a bit, but I've been working in tech and real estate, or sorry, tech and the business side of tech and finance, I should say, for a long time. But, it's been mostly real estate for about 3 years now.
I'm Nick Haraden, and, similar background with Michael, with, the family was always in real estate, real estate agent. My dad's a contractor, builds, development stuff. Never really thought about it too much on the real estate side until really like right before COVID, and my wife and I were just talking about how we can get another, revenue stream going. Just kind of jumped in, did a ton of research, bought some single family stuff, some Airbnbs, met Michael, and we kind of teamed up and bought a apartment unit. And then from there, we kind of just expanded, and that's pretty much my background for that. I also was in hospitality before, so kind of led me to be able to manage people better on the real estate side as well, because it is a people business. So, that's something that really helped me succeed to where I'm at now.
Yeah, I'm Marc O'Bryan. I think I'm the only one in the group who doesn't have any real estate in their family background. But I have a similar background to Michael. Actually, I worked a lot in tech. Actually used to work with Michael at a previous company. And for the last 8 years, I've been doing mostly digital marketing. But again, I was kind of brought in to kind of help with streamlining some of the operations in the back end, just keeping things organized and keeping things flowing.
Let's kind of touch before we dig in a little bit deeper. Why are you choosing real estate as kind of your vehicle to where you're going to, obviously you're spending a lot of time in it. And then obviously you're hoping to get a lot out of it, but there's a lot of different opportunities of what you can do. You can invest in other things. And, for some people, they're kind of all in on real estate. For some people, it's I still diversify and invest in other places. But just kind of curious, for you guys being outside of real estate, kind of with your day job, why are you choosing to spend your time in real estate long term?
For me, I was always, I've always invested in the stock market, and with a background in business, I think, I had a small advantage in that I could interpret financial statements and things like that, right? Where most people were just looking at charts and and making a guess. And that was helpful, but I think where it falls short is you have no control over operations of the business, right? So you can't actually implement any changes. You just, you're kind of at the mercy of management. And I also hate that aspect of, watching charts go up, day by day and stuff. Not that that's a healthy habit either for people investing in the stock market. And we still do. Obviously, you have to diversify. I wouldn't tell anybody to put all their eggs into real estate. But what I love about real estate is not only is there the aspect of analyzing the business and looking at the financial statements and where are we strong and what needs work, but we can also actually influence them. And I think that's I think with our particular combination of skills, we have a huge advantage compared to most other investors, and that's why we do well at it.
Yeah, just all the benefits of real estate is it's just insane. Tax benefits, you're getting, your rent, you're getting your mortgage paid off by someone. You're getting equity build, you paying down your principal, you're getting your equity build on it as well as years go by. You can take loans out on the house. I mean, there's so many vehicles you can go with real estate. And we certainly do, we certainly do real estate as our full-time jobs. I mean, at this point for sure. But I think that the major benefit for me was just financial freedom with it. I have stuff in the stock market, but real estate was the fastest, most efficient way to and also I love it, but most efficient way to get to financial freedom for our family. And also along the way now it's just it's the job that it's not really a job, but something I just I want to do for as long as I can.
Yeah, and for me, when I was brought on, I could just see that these two guys are very intelligent guys, and they have a very very repeatable process for successfully going full cycle on these properties. And so for me, it just seems like a safe bet and a fast way to kind of grow investments.
I say it's a entrepreneurial playground. Like there's a lot of things you can do with it. And once you gain some knowledge on real estate, like you can choose to specialize in different areas. You can choose to kind of go really deep if you want to. You can pop over to something else, if it was storage units or, something like that. If you learn how to do syndications, then it's maybe identifying a different asset and partnering with different people. So there's a lot of flexibility that way as well. So there's just a lot of cool stuff that you can do inside of the real estate space. Now you guys are, at least now that you're together, choosing to invest in St. Louis. So for a lot of people, as they kind of decide on markets, sometimes for people, it's paralysis by analysis, right? Like I could choose any city anywhere in the world. And so I'm going to choose to do nothing instead, or I pick a city and go with it and we'll continue to grow off of it. And you can also add other places. But what was it about St. Louis, or even just the type of market you were looking for? And this seemed to kind of check off some of those boxes. I'm curious to hear your journey on choosing markets.
I can start it, and Michael, you can tag on the end, but
sure, yeah,
or tag wherever. But for me is where our first portfolio was. So my wife and I found St. Louis by doing a lot of market research. I literally picked up the phone, called property managers, insurance agents. I tried to learn everything about a lot of different little cities. And then St. Louis was really the one that kind of stuck out, where we could buy something and still make some good money on the rent and cash flow something. So at the beginning, we didn't want to take a huge risk. So it was that lower end price points. I mean, we're talking like $100,000 to $200,000 homes. They're renting for $1,500 to $2,000 a month, right? So we wanted the cash flow. It ended up being a great market because appreciation was going crazy. The Midwest was just going nuts. And then the people that we met, that I met on the ground there, were just awesome. Like our property management company, from day one, they're still with us on 265 plus units now. So they've expanded with us, they've grown, they've made us a priority. So finding those markets where you can actually connect with people, and also that you can also go there and check it out if you need to, obviously. But I mean, we're on the West Coast, so going to the Midwest, I mean, it's a short flight, but we were able to build those connections where we didn't have to be walking the streets every day, where we can learn street by street. And then Michael had his portfolio in Wisconsin, so we were just kind of going back and forth to seeing, when we met, we wanted to get bigger. Hey, are we going to go to Wisconsin? Or are we going to go to St. Louis? Because we already knew those markets so well. We knew the contractors and the PMs and everything. And we ended up finding a great property in St. Louis. So we kind of just stuck with that and just grew in the market there.
Yeah, I was before I met Nick, as you mentioned, I had a portfolio in Wisconsin, and that was partially because I knew Wisconsin well. I had friends there who were realtors, and it happens to be. I mean, I love the Midwest as a market in general, just based on the numbers. Really, the main metric I look at with the market is the GRM, the gross rent multiple. So how much does it cost to buy property? You want that number to be as low as possible. And how much are these properties renting for? You want that to be as high as possible. And the buy price divided by the rent is the GRM, is the gross rent multiple. And it's still a really important part of how we underwrite individual properties as well. But you can look at that on like a metro-wide basis. And Wisconsin, ranks really well. I was also looking a lot in Pittsburgh and Cleveland, I think, and a few other cities. And when Nick
Cincinnati
mentioned St. Louis, I was like, oh yeah, I think, I had a list, and I was like, I think St. Louis is really high on that as well. And there are other factors, obviously, but I definitely wanted to invest in property that was already cash flowing. Everybody was buying in Texas and Florida and stuff, and they're all just getting crushed right now. We wanted it to cash flow from the start. It's been fantastic. I was familiar with St. Louis. I'd been going there since I was a kid, with my dad and for work and things like that. So had a sense of, the people and there's that sort of Midwestern pride and work ethic and things like that. So, when we found that one, like Goldilocks property where all the numbers worked, it was a no-brainer.
Yeah, and the people are just awesome in St. Louis. I mean, like everybody that we meet, we've built some really great relationships, and we wouldn't be able to do what we do without those people. So, it's you don't always come across people that are very ethical and honest, and of course we come across some that aren't, but the majority of the people that we've met in St. Louis have been, amazing.
Now, you talked about relationships. And so like as a real estate agent that works with out-of-state investors, I know that, they can choose to invest with me. They can choose to invest in other areas. And that's why a lot of my investors, they live on the coast. They like investing in the Midwest. But I also know people are choosing the St. Louis's, the Milwaukee's, the Ohio's as well, in addition to investing with me. But you talked about relationships, keeping with the same property manager. And I think that's a thing. Sometimes investors, they may lose some efficiency, or they may have some learning. I don't know if I want to say mistakes that happen when you bop around a little bit in a lot of different spots. And so it's kind of like, if you've got a good thing, stick with it, right? If you've got a property manager that like, and trust, you can continue to find good deals, continue to, go down that road and build deep. And yeah, you guys can decide to invest somewhere else in the future too, but you might get better deals, more efficiency, and the matching up. I also tell like what's on a spreadsheet doesn't always match what actually happens, but maybe you guys have found that you'll be able to produce what your projections are when you have great people that you're already working with, versus kind of losing some of that efficiency going in other markets.
We always talk about our buy box, and we know exactly what we want, where we want it, when we want it, and how we're going to get it, because we've met all the people along the way. And, it's funny, the first person I called in St. Louis was the owner of our property management company. His name's Chad. And I talked to him for like 20 minutes. I'm like, man, that is hard to get, So to be able to like call someone and actually talk to like the owner of the company, it goes a long ways. And I think for like, agents and stuff like that, just how do you just being available, learning the market for your investors and such is a big portion as well.
This happens to me all the time. I get sucked into the spreadsheets, and I'll look at so many properties, and I'll go to Nick and say like, oh my God, I have one that works great. This is the gross rent multiple, right? This is the potential NOI cap rate, and he's like, oh, what's the address? What neighborhood is it? Oh yeah, I forgot to check that. Like I don't even look at the location, and then Nick will call, our broker, our insurance broker, our banker, our PMs, and they'll all just go, they'll just go drive,
drive by.
We have relationships with all these people, and they'll all just go drive and check it out. And sometimes they come back and say like, nope, boards on the windows, and the whole neighborhood is, whatever. And I would never have been able to tell that from a spreadsheet. But you really do need to have boots on the ground, even if you're remote.
Like
Yeah.
just literally last week, our inspector that we use for all our properties and when we buy properties, he called me. He's like, "Hey, I was just across the street from Wild Cherry. It's a property that we bought, early last year." He's like, "Hey, everything looks good." I'm like, "Hey, can you go check out the trash situations? We're having a couple little issues." He's like, "Oh yeah, no problem. Let me turn around. I'm right down the street." So like
Yeah.
stuff like that, where someone calls you for no reason, just to be like, "Hey, your property's looking good. I was just driving by." Um, nothing to worry about. Hey, yeah, no problem. I can go back and check it out really quick. So, stuff like that's like gold for an investor, right? Especially when you bring on investors. You need to have people that can actually like watch your back and, give you that little extra, like, nuggets here and there, like, hey, this is looking good, or, don't worry, or something like that. So
A little bit more maybe like a VIP type level of service. Not that a property management company wouldn't give you good service, but it's some of the little extras that you don't necessarily ask for or to expect because you have a good relationship. They want to keep that with you. And it's not like, oh, this is Nick, I better go give him a high priority. Like he likes you, he's worked with you, he trusts you. And it's like, oh yeah, I can just swing back and do that. So I think that's sometimes people don't it's hard to put a price tag on that, but it really matters. Now, I'm sure it's, for some people, you maybe were just fortunate enough to run across a great property manager from the beginning. Some people they might have to cycle through a few that don't work as well to find that good one.
But it
But
takes
yeah, that
time
does.
too. Like it takes work for the on the investor side too. You can't just expect, you call someone like, "Hey, I got one property, can you management?" That's not going to do much, right? You got to like put in the time and actually like care about these people, right? Like the people are like going to be your main people on the ground, and like, give them a call, ask them how their day is going, maybe write down when their birthday is, send them something. I mean, the first agent I ever worked with in St. Louis for single family stuff, he was awesome. He like walked through all the units with me, took the time. And for his birthday, I sent him a golf club. Like like stuff like that just goes a long ways to build those relationships. And you never know where it's like going to lead you later on. And we've gotten deals, off market deals from God everywhere at this point, just because we took the time to put in to build the relationships. It can't just be like the PM helping you, right? You got to help them out too with different things. So we make sure we pay your people on time, right? That's a big one. Stuff like that. So
Yeah, and you mentioned, getting off market deals because as, for people that maybe work with smaller multifamily, they might see stuff on the MLS or might network, but for the larger stuff, it's through the relationships. And you could reach out to somebody and say, "Hey, what do you have off market?" But it's much more likely when they find something off market, they think, "Oh yeah, these are the guys I got to call because they've owned this other stuff." So you kind of benefit from getting better deals when you've poured in a little bit more and built a big reputation in a community like that.
100%, yeah.
Even before that, because we try to get on the list of every broker out there, and it helps to have a track record of acquiring large properties, right? But even before that, one thing I do is if a broker sends a property over, I'll always analyze it, always write up, if not an LOI, I'll still show them like the underwriting that we did and the number that we came to and why it wouldn't make sense for our buy box, and send that so they don't just send, we don't want to be people that they're just sending properties into a black hole and they never hear back. We want to show them like, "Hey, you took your time to send this to us. We took our time to analyze it, and maybe this is why it's not working." But and a lot of agents have written back and said that they appreciated that.
I feel like sometimes I've gotten, kind of like the last scraps when you reach out to them. It's like, "Well, I got this one property that I can't move and I've sent it to everybody else, but maybe you're a sucker and we'll take it,"
Yeah.
And so it's hard to do that. Now, you'd mentioned about, when it comes to finding deals, Michael, you kind of took a different approach or a thorough approach with your background to be able to kind of analyze at detail some of these properties. So talk a little bit about kind of finding and analyzing the deals.
Yeah, I think, one thing a lot of folks don't realize getting into it, or even people who do get into it and unfortunately are, struggling, is just the volume of analysis that you have to do to be successful. Because literally most of the deals that you come across don't work. And when I got started with, I never did single families, but with multifamily, quads and duplexes and stuff like that. What I did was I worked with an agent, And I said, I want to see the entire MLS. Like, I don't want you to, bring me the handful of properties that you think will work. I just want to see everything, and I'll do the analysis myself. And even she struggled with that a little bit. I actually had to take an online video course to teach myself the software, the MLS, software that she was using, so that she could send me spreadsheets with literally hundreds or even thousands of properties at a time, like her entire region, show me every property that is more than one unit, for instance. And then I put all those into a spreadsheet with each row as a property, right? So you have hundreds and hundreds of rows. And then I started adding columns for like, okay, well, here's the income that it's generating. Luckily in Wisconsin, like most brokers are good about putting in the rents and stuff like that in the into the MLS. Some put it unit by unit, and I would have it do the math. And then, okay, so what's the asking price? What is the monthly rent that it's earning? Okay, now here's a column for like the interest rates that I would be paying and what a mortgage payment would be. Here's, for expenses, I just use the 50% rule, which is pretty common. Usually about 50% of the revenue ends up being expensed. And that would get me to like a very rough, but rough underwriting that right away let me eliminate 80% of those properties, right? That they're just not going to work, right? And then I could focus on that top 20%. And, some of the ones at the top, they would say, I'm looking back at it now, it would say like, oh yeah, this is a, 40% IRR, or you're going to get a, 48% annual. And you'd go in and it would be too good to be true, right? These are the ones kind of like we were talking about with Nick, where like, oh, you look at the pictures and like there are boards on the windows and stuff. But, that would allow me to get down to those 2 or 3 that actually would work. So like I probably looked at 2,000 properties before I bought 2, and that was how I got my first 10 units. And with multifamily, with large multifamily, it's a little harder. I mean, the smallest properties we're buying now are like 25 plus units, and they're not, you don't get to look at dozens every day, but you still have to look at a lot. We still look at LoopNet and all those where people say that's where deals go to die. That's kind of the MLS of large multifamily. But we also have brokers sending us lots of properties, and yeah, we underwrite everything, and most of them don't work. But if I hear of so many people who like will see some property and they'll be like, oh yeah, nice neighborhood, this and that, like maybe this will work out. Like the chances of just chancing into a property where the numbers work really well is very, very low. I'm a big proponent of just get as much deal flow as you can, get as much data as you can, and kind of go from there.
Yeah. I tell investors, it's like looking for a needle in a haystack, but we've got to go through the haystack to find the needle. Like if we really want to find a top-notch property, it's going to take some work. And I've got an investor now that's kind of bugging me, like, when's the next deal going to be? It's like, hey, I'd love to find a great deal, but I also, definitely want to make sure that I feel comfortable with the returns that property is going to produce. So I could go rush and find one tomorrow for you, but if you want one that's really going to help you make money, it's going to take a little bit of time. And so it's finding that balance between getting a good enough deal to move forward with. And yeah, you could take deals that are okay, or, maybe above average, but we're looking for the top deals here, and it's going to take some time to find those.
It took us, I'm thinking of Ben and Shirley Gardens, Nick, it took, there was a physician who wanted to place some capital with us, and he kind of led a group of four physicians, or was sort of speaking for them, and I was like, what they were looking for, I was like, that's not really in our buy box, but I see those properties all the time. But it still took over a year, I think, of looking at the properties that kind of came by to find one that worked for these guys. And and then it worked out really, really well because we had been so picky. And then those guys ended up making introductions for us that led to a deal, literally almost 10 times that size. And introduction to some real estate funds and stuff like that, because we had been so picky, found a property that worked so well, and then they were like, hey, these guys are the real deal, if you can get those introductions made, like, holy cow.
Yeah. And that's why it's really important to know your market, because once you find the numbers that work, then you got to be like, okay, is it in the right spot? Does it hit all the boxes? Is it all one units? Like what is it? Right. So it's got to be, you can't be spread too thin on all your markets, because then, you'll be finding stuff left and right, but then you're not going to know, oh, it might be a bad area, or it might be just, a crappy place, like who knows?
Yeah.
So you got to make sure once you find
Fire
one,
damage, flood zone, crime,
endless stuff. Yeah.
these are the things that don't show up on spreadsheets, right?
Just to add to that, I mean, the level of due diligence that we do for these properties is really insane. I mean, Nick and I on the last property walked 144 units individually just to, kind of write down like what things would be needed for rehab, or just to get our rehab budget in order. So it's a tremendous amount of work when you are actually going to go in and potentially buy a property.
Yeah, I think a lot of times people think capital raising is just trying to get somebody to give me some money for a deal, but there's a responsibility aspect to it. Like they are giving you their future retirement or future whatever money, and they're trusting you. You've got to be a good steward with that money. And if you're going to, promote some returns, obviously you're not promising anything, but if you're going to advertise, like, here's what we're expecting, you better make sure that you've got your stuff figured out to be able to confidently feel good about saying, here's what I think this building's going to do.
Yeah, I can tell you 100%. It keeps every one of us up almost every single night. Thinking about every single thing that could go wrong. What are we going to do differently? How are we going to fix it? Everything. When you buy a place, stuff goes wrong every day, right? Or not every day, but definitely weekly. Something is happening. Not always wrong, but something different than you planned on. And when you have other people's money in your hands, and you're responsible. For me, I think about it at 1 a.m., 2 a.m., 4 a.m., multiple times a week for sure.
We had I'm part of this group. I'm going to be speaking about underwriting with this group, and they asked everybody to introduce themselves and say their goals. And the, dozen plus people that went ahead of me, all their goals were, I'm going to acquire this many units this year and raise this much money. And it got to be it. I'm like, I'm going to get my investors 15+% IRR, beat our projections. Like, ultimately, that's all that matters. Like, if you nail your numbers and you get your investors the returns they're after, then it's easy to raise capital, right? And then it's, it doesn't help find deals, but, then you can start going after the much, much bigger stuff.
Now, talk about a partnership here, because I know for some investors, it's like, I want to do this on my own. I'm a lone wolf. What I love about kind of larger and especially syndication is there's very much a partnership piece to it, because you have to work with each other to be able to put things together. Because number one, there's a lot of work involved. There's a lot of moving pieces. But two, for you guys, talk about finding each other, like kind of a shared vision, and saying like, yeah, these are the group of this is a group we're going to kind of link arms with here, if not for life, for at least the next phase of life, to be able to build this together with each other.
Yeah, I had stuff in the Midwest. I was on Facebook and some forum, and people were asking how we made the numbers work in Southern California, and I said, we don't. We buy in the we buy in the Midwest. Nick saw that comment, I think, and he reached out and said, hey, I'm in Southern California. I buy property in the Midwest. I'm looking to scale just like you are. Let's compare notes. And I had been through a couple of partnerships before that didn't work out for various reasons. But for me, what worked out really well is when we talked about what sort of energized us and, charged us up, it was very different between the two of us. I could see Nick liked the construction side. He liked the people side. He liked he was more detail oriented, things like that. And for me, I liked looking at financial statements, analyzing the business, making a business successful. That was sort of my background.
I can't imagine someone being in the syndication world as an operator by themselves. I mean, if they are, they're not being hands-on. There's no chance, because there's so much work that needs to happen. And I mean, we brought on Mark because we knew if we wanted to get bigger, we had to have everything covered for our investors, not for us, but literally for people that are investing with us. We wanted to make it the best experience possible for them, obviously. And we wanted to keep buying and getting bigger. So the only way to do that is with a partnership. You can partner with your property management team, but there's no chance that they're going to take care of anything like you will, So for me, it was really similar. Obviously, that's how Michael and I met. We both had similar goals that we wanted to reach. I just always wanted to kind of get bigger. I was always a hands-on person with my single family stuff and my smaller stuff. So I just, I wanted to learn the property management business more. So I took a bigger role in that when I first started. I did some property management stuff locally too for where I am. So that was just an easy transition for me. I just learned the construction side a little bit more and contractor talk a little bit. I mean, that's not too hard to pick up, but we hired good people to help us with that, of course. But I knew the PM company already. I knew a lot of people on the ground, so that wasn't a hard transition for me either. So that's something that I really wanted to do. And then Michael had all the business background and how to actually put it all together, how to bring on investors, and then we took the leap. We found a 24 unit that was like way more than we've ever done, but we both were extremely confident in our own abilities, and we raised our capital in I think 2 hours after our call. So we were able to lock down that property really fast. And then, like I said, we brought on Mark last year, and he's been a huge asset to our team, making sure that we can grow and do it successfully without failing. Because you see a lot of operators just kind of just falling out right now because they grew too fast. They didn't know, what they were buying, or they knew what they were buying, but they didn't know the cap rates and, all this stuff, right? So, our team is really tight, and we're able to grow at the right speed for our investors too.
Yeah, I will say what I really like about our team is that we each have a pretty specialized skill set. So we each bring, there's not a ton of overlap. So it's a very kind of efficient team, I would say, and we work really well together. And also we have kind of the same. There are some people in this business who maybe don't operate with the highest standard of ethics, and I can safely say that all three of us, we really care about our tenants. We always try to work with our tenants, and we're always try to be as fair as possible. But that's also, I think you want to have people on your team who have the same mindset as you in that regard as well.
And also just being available. I mean, we meet multiple times a week. I mean, we're constantly texting and having our stand-up calls 2 times a week. But I mean, we meet more than that, obviously. But we probably are on a video call, I would say 4 times a week minimum. And our families all know each other at this point for the most part. I mean, we've taken investors out to dinner all together with our families. So a partnership is going to be the biggest factor as someone starting off and they want to get into 5, 10, 20, 50 units. You might go through some not so good partnerships, but finding that partnership will be probably their biggest asset as they grow.
Well, that is the thing that I love about syndication is it's really this 1 + 1 = 3 mentality. Like, I can go flip houses on my own and I can build a pretty good life, or we can decide to do something like this together. Everybody plays their part on the assembly line, and we can, produce a lot more results together when everybody kind of has their role, does what they're supposed to do, and you can achieve it and really help, and then be a vehicle for investors, right? Like, they want to place capital. They don't want to take the time, or may not know how to take the time to be able to go find these deals and find these property management companies and vet all this stuff themselves. And so they're trusting you. So it really is the best of all worlds put together here to find great deals.
I'm stunned when I read, in like Bigger Pockets forums and stuff like that, the number of people who say don't partner, because I partnered with my brother once and I got screwed or something, and don't use property managers because nobody's going to care for your property the way you do and stuff. And like, both of those are true. You need to be thoughtful, choosing partners. You need to be very thoughtful choosing a PM, but like, nobody scales without partners or without property managers. You can't buy 144 townhomes like we just did and planning on, painting every unit and stuff like that. Like, it's a team sport, and we've used, partnerships and property managers from the start. So that's how you get big.
Well, thank you guys so much for coming on and sharing. There's a lot of really cool stuff. So much that we, didn't cover. Maybe we come back and do another episode sometime in the future and talk about it. But thank you guys for sharing just about your goals, what you guys have accomplished, how you're working together. For people that want to, reach out to you, learn more about what you guys are doing, how can they do so?
We don't really have something to pitch today. We're kind of in between acquisitions, but we love, meeting potential investors, just other people who just want to chat real estate. That's some of our best relationships have just come from, talking REI with people. So I would encourage anybody listening, if stuff we've said has kind of resonated with you, go to our website, is mattanzacapital.com. Hopefully you can put that in the liner notes. The spelling is a little funny, but MATTANZA capital.com. And I'd say sign up for our investor list. We don't spam at all, but when an opportunity comes along, we'll reach out. And feel free to, there's a button just to the left of that to set up a meeting with us. And you don't need to have a big agenda or anything like that. We just like chatting real estate with anybody. So, don't hesitate, set up a meeting and let's talk. And if you want to invest, we generally want to have a pre-existing relationship with folks beforehand. So we're doing those right now. We're just getting to know folks for our next deal.
Awesome. Well, thank you guys so much for coming on. We appreciate it, and best of luck as you guys continue to grow in the future.
Thanks, Mike.
Thanks, Mike.
Thank you.